I don't know what it is either. Okay. I don't suspect we'll get a large audience today, but it'll start the grabbing process.
All right, everybody, you are here to get all your questions answered about buying a house. So if you're interested in your first house, your second house, an investment property, a house for the grandchildren, maybe your children, maybe you want to move out of state, maybe you want to move up to a bigger house or down to a smaller house. All the questions that you have about buying houses, load them up in the chat box right here. We're going to answer every single one of them live. Every single one of them.
Live.
And you will get your help on your next step of becoming a homeowner. Or maybe it's your 5th house, 10th house, 800th house.
Ballers here, man. We got some ballers.
There's a lot of them in the United States. They're starting to shrink, but there's a lot of them. When will the interest rate drop? We already got a question out the gate. Out the gate. Who is that? That's JY. How you doing, JY? How you doing?
What's up, JY?
So as far as the interest rate drop, okay, I don't know if you've been paying attention, but the Fed has already done their first official reduction. It's already happened.
Dude, you're starting to sound like Kamala.
You're probably asking, when is it going to affect interest rates? Because what happened is interest rates went down and mortgage rates went up. So what the hell is going on?
You're starting to sound like Kamala. She's like, hey, when's the interest rates going to get better? They're already better. When am I going to be, wealthy and wise?
Moving on. So when are they going to when are the mortgage rates going to go down, Lee?
Well, I think there's going to be some type of effect from the election. I think there's going to be some effect from the election. Right now, the markets are factoring in that President Trump's going to win. Because of that, they're factoring in a slight recession that continues, and the bond market is going up. And it's probably going to last for a little while. So the answer to when is it going to go down, that's a $64 million question. Because you're right, they did drop. The Fed came in and dropped interest rates 50 basis points.
Who sounds like Kamala?
Me right now. 50 basis points. So when are they going to drop? Maybe first year. Maybe. They did go down for a while. They started going down dramatically. Like a lot. And then they didn't. And they went back up. So that's what's happening right now.
So you're talking about consumer confidence.
Oh, Bill Gross is back.
So you're talking about consumer confidence.
It's not just consumer confidence. It's economic factors, not in addition to consumer confidence, like unemployment, GDP, CPI. Consumer confidence is one of those factors, but all of those things factored in together, they create the market that is the bond market, and the bond market is going up.
So why is the bond market going up?
Because we believe that Trump is good for the economy. Good for the economy means, hey, I can put more money into bonds. More money comes into bonds from foreign countries. More money comes into bonds. Supply and demand. Bonds go up because the 10-year yield is what powers the 30-year mortgage.
So why is
as
Trump
that
a
goes
factor?
up? Because if we believe that we're going to have a stable economy and not like an erratic economy, then we know it's like, hey, you just got a job and it's going to pay $200,000 a year. It's guaranteed W-2. All right, cool. Are you really worried about buying that new Expedition that's going to cost you $700 a month? Not anymore.
What do you call that?
That is consumer confidence. That's why I told you it's not one thing, because consumer confidence should actually send the market down, or the bond market down.
Right.
But the stock market is flying. The stock market is doing really, really good, and they anticipate a gigantic correction some point in the next 3-4 years. So, yeah.
So a real layman's term is there's money. When more money goes into the stock market, less goes into the bonds. When more goes into the bonds, less goes into the stock market.
Yep, kind of like that.
So
Yeah.
right
And
now, all the money's going into stocks.
Not a negative. It's going into bonds. The
So
reason the
so
bonds
why
are
is the
flowing up,
rate not dropping then?
because so if the bond market, let's say that bond index is coming in at Oh, I don't know, maybe 5.5%. Well, the bonds, if you buy a bond, you get 5.5%. But I just lost my train of thought.
So if a bunch of money goes into bonds, the rates go up or down?
If a bunch of money goes into bonds, rates go up. You want the technicals on why they go up?
No, I'm saying they go down. When a bunch of money goes into bonds, they go down.
Price of bonds goes up.
The price of bonds goes up.
Mm-hmm.
All right, to be continued.
The secondary market, yeah.
All right, talk to Bill Gross.
I guess. Bill Gross, why do we need housing market when sheltering is a human need? That's cute, Bill. We like you, man. We really appreciate you showing up. I agree. It is a human need, but I also agree that we are animals and nobody guarantees our survival. The human being, the human species is the only one that says, hey, I feel sorry for these people. Let's try and help them. You know what? If you had a deer in the wild and that deer couldn't survive, he's food. That's it.
All right.
Harsh.
Jeremiah Benton. I got approved for a home with a 565 credit score, I'm assuming. Had 56% down, though.
Oh, my God, Jeremiah. Yeah.
That'll help you.
That'll help you a lot.
Definitely help you.
Yeah, that'll help you a lot. 56% down. That's a very solid loan. And there's probably one other factor in there. They're going to loan off of appraisal amount, not purchase price. Because the bank wants to make sure that you're not fudging the numbers. So appraisal amount is a very important thing there, Jeremiah.
So for the 4 million of you watching right now,
4 million.
Jeremiah Benton's situation is very unique. He comes in with a very strong leg of the loan, which is cash, money. So there's 3 legs to a loan: income, credit, assets. Okay? If one of those is weak, and I'm going to say right now that Jeremiah's FICO score is very weak, he comes in very strong with 56% down. Very strong, which means the bank has very, very, very low risk if anything were to happen with Jeremiah and him not making that mortgage payment. So if you're coming at us with the 565 FICO, if you come at us like Jeremiah, you'll probably get your house.
Yep.
If you're coming at us with 0 down or minimum down payment,
which is most people think. I get texts today, hey, can I do a one-time construct with a 520 FICO? No. Just no. I don't even spend that much time on them because it's ridiculous. You get so down. Hey, you don't understand. Verizon is hurting my reputation because I never authorized that charge. Nobody cares. Nobody cares. All we care about is what's the FICO score, what's your assets, and what's your income. That's it. We don't care. I don't care. When people are like, hey, these people only give purple people loans, or they don't give purple people loans. I don't give a shit. From a frontline loan officer, I am looking at, can I make a deal work because I can make a commission? That's it. I don't know any loan officers who look at it different than that. Do you?
no.
Because everybody's like, hey, I got to make a living. Yeah, we're not like so flush that we can just go, you know what? I don't like them purple people, man. Them purple people don't get loans. I'm not going to do a purple people loan. I don't care. So it's crazy. And when it comes to, hey, look at my story. Nobody cares about the story. Nobody cares. We want to know what your credit score is.
Well, you don't know what happened. You don't know what happened.
I know.
I lost my job.
No.
I got hurt.
You did?
I couldn't make the payment.
No way.
I wanted to.
No way.
But I couldn't make the
But
payment.
you wanted to?
But now I have a 400 FICO. I really wanted to. You don't understand.
Oh, you really wanted
I wanted to go borrow money
Got
so
it.
that I
All
could
right.
pay it.
You really wanted to. Got it. Because you really wanted to, still nobody gives a shit.
So here's what you do, guys. If Jeremiah came to us and said, hey, I have a 565 FICO, but I have $200,000 to put down, we're going to the next step. Don't need any more data. Don't need any more data. Don't care why you got that 65. Don't care why you have that 200 grand. But it goes to the next step of, now, are you working? Do you have an income so you can start paying that back? Don't give us your stories because no one cares. What we do care about is the facts and that if we can actually help you. And if we can, will you?
Yep, absolutely.
What if they're purple?
Okay, if you're purple, I'm fine with that. It's just, I'm going to be looking on the application that we do, and it's going to say white, Asian, black, blah, blah. I'm going to be like, there is no purple, but there is an other box. I'm going to click other. Yeah.
Yep. And then Jeremiah also said, I did contact 3 lenders. One wanted me to pay off collections, one denied. one approved, no questions asked.
I would be worried
What's
about
the
that.
difference? What's the difference? No, hold on.
I would be worried about that. No questions asked.
Well, yeah, there's got to be a lot of questions asked, but no questions as to why you're approved. And here's why. What's the difference between the lender who said denied and the lender that said approved? What would you say is the difference?
Swipe right. The lender that says denied. Well, the denied one just didn't give a shit. He's like, hey, you know what? 565. I don't want to work with you. And that literally is because of the FICO score and the problems that come behind it. And that usually goes to the loan officer. If you go to a loan officer who actually wants to make a deal work, we're like, okay, cool. Let me run DU and let me see what I get. Then I'm gonna shoot it up to a manager because I'll run DU even if it's below the guideline because I want to know why you're disqualifying. It will say obviously FICO is beyond FHA limits or Fannie Mae limits or whatever. It'll say that, but it'll also say something else: insufficient funds to close, or whatever. And I'll build the file and I'll work the file, and then I'm like, okay, cool. If I can get this FICO up to a 580, and then there's a certain spot where I just go manual. I go, cool, let me send this to a manual. I wouldn't just send you off and going, hey, you're putting 50% down. Don't worry about the funds. I'll take care of the rest. I have to send you for underwriting. I would ask a lot of questions because the last thing I want is for you to get into escrow, drop a big EMD, and then boom, the loan can't be done, and then you lost your EMD. What? Yeah, but that's just because I understand the business.
Yeah. So when you're dealing with the loan officer, guys, Jeremiah ran into it. He ran into 3 lenders. One of them was able to do it, and the only reason why the one was able to do it over the others is because 1, he had the knowledge, 2, he had the skill set, and 3, he cared. He just cared. The other ones are looking for a quick buck, and once they see a low credit score, gone, moving on. But once again, Jeremiah and everybody else listening, it's the data that you give. So if you're giving a big, long, drawn-out story, you're going to lose the attention. But if you say, hey, I have shitty credit and a lot of money, can you help me?
Shitty credit.
Next step. How much money? Next step. Do you have income? Next step. Let's do an application. So Jeremiah, you probably went down the right path with that third loan officer. Yep. But congratulations on getting that house.
What's a purchase price, Jeremiah? I want to know because I'm in the middle of a purchase price right now with $80,000 purchase price. What? 80 grand. Can you believe that shit? 80 grand.
Itty bitty.
So when I talk to the client, I'm like, hey, listen, I'm going to do your loan, but I want you to know we're going to have problems. What are the problems? Almost immediately, here's a problem. Hey, we've got some issues with the property. Can the seller give a concession? Wait. What's the rules on seller concession on a Fannie Mae?
Wow. There's different tiers to it.
Oh,
so
tell
if
me.
you're under 10% down, if you're putting less than 10% down, 3% concession. If you're going 90 all the way to 75% down, 75 LTV, 10% down to 25% down, it jumps to 6%.
What?
It jumps.
So if we put more money down, I can ask for more money from the seller?
Yeah.
So now here's the problem with that. So because it's all relative.
We'll get to you, Sebastian.
Yeah, we're going to get to you
in a second.
And we can hardly wait to answer your question, Sebastian. But because it's all relative, 80,000, 3%, 80,000, 3%, that's $2,400. $2,400 is not enough to cover a termite tent or a roof repair or a foundation crack or anything that's significant. $2,400 is just not enough, and you've exceeded guidelines. Forget closing costs, because closing costs are probably going to range $4 grand, $5 grand, and then we're going to start hitting into something called an HPM. So everything is relative. Now we're talking to Jeremiah. No, who's the other one? Sebastian. Sebastian
Seabass.
in Los Angeles. Sebastian.
Seabass.
So Sebastian in Los Angeles, you cannot find an $80,000 house. You cannot find an you just cannot. It will not happen. Not in Los Angeles. However, you can find an $800,000 house. They're hard to find, but you can. You can find an $800,000 house. Yeah, and $800,000 times 3% is $24,000. $24,000 will fix a lot of things. That'll put a new roof on a house. $24,000 will fix all the plumbing. It'll tent a house. All kinds of good stuff. So, can we help somebody in LA? Absolutely. If they just finished credit repair, are you the credit repair guy? If you are, then you probably know that upon entering into shopping, I have to withdraw all challenges on the credit, because if not, I'm getting false positives. Once I withdraw all the challenges, then I got my real FICO score, and I can move forward. Yes, we can help. We are a direct lender. We are actually in the Inland Empire. I deal with a lot of LA transactions, a lot of them, and we know the rules pretty well. You can go up to $1 million on all the loans in LA, in all of them.
Easy. Easy. Time for a commercial. Seabass, take a screenshot.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by calling the numbers on the screen. But don't call them right now because we're live on Facebook, Instagram, TikTok, and YouTube. So call us after we're done. This will disappear in 5, 4, 3, 2, 1, bye.
Seabass, you the man. Okay, we got to jump back because we skipped a couple of people.
Oh, dude, we can't skip nobody.
JY said my interest rate is 6.5. I just hope one day I can get it lower than that.
JY, it is going to happen, but it's not going to happen today or tomorrow or the next day because right now I'm pricing loans in the I locked one yesterday, 6.9 par. 6.9 par, good FICO score. 6.9 par. What? I had the ability to buy it down to 6, but it cost 10 grand. I was like, holy smokes. But that 6 probably 3 months ago would have been par. So it's a whole different game right now. Rates have creeped up quite a bit.
Yep. Jeremiah said he bought his house for $250,000, put $135,000 down, $70,000 a year income.
That'll do it.
I would have done that deal all day long.
I would have done it all day, every day.
What city and state, Jeremiah? Where you at?
Every day.
And Sebastian said she's probably open to finding in other areas. Okay, that's good.
All right, cool.
Open up her search. Whoville Hater in the house.
What's up, Whoville Hater? We've missed you. We haven't been around for a little while.
He missed you.
I missed you.
He literally was talking about you.
I missed you.
Crying about you.
Yeah, there's some people that we know we got live. We had some stuff to happen where we couldn't go live for a little bit, but we're back to live. We're back to helping people. And the market's worse. They need help more than ever now. Mm-hmm. More than ever.
Mm-hmm. So for all 8 million of you that are watching us right now, I need you to heart it up because we're not getting a big following right now. So if you like what you see, go ahead and tap that screen as many times as you can. The more, the merrier. It all helps us. And if you have one of these for us, can you share? Please share. We haven't done this in probably a month, maybe more, on a regular basis. So we're trying to get back to it, and we're trying to get into the swing of things. And the more people that enter into this screen, the more people ask questions, the more we can help the world.
Yeah, well, for a little while there, it got crazy, man. The rates went down. Fed dropped dropped 50 basis points. What? 50 basis points. They dropped 50 basis points. And all of a sudden, the mortgage applications just started flooding in. We're getting them from online. We're getting them online. We're getting them online. Actually,
the internet.
The internet. We're getting them on the internet.
The interweb.
The interwebs. I get them on one computer. Then I go to another computer. They're still on that computer too.
They were even on my phone.
They're on your phone too. Holy shit. So,
right.
Anyway, market switched and they're going back up.
All right, ton of questions just flooded in.
Cool.
Let's get to them. Argon Hoy 253. I have over 80% equity in my home, but my credit isn't good. Can I pull out some money and refi?
Nope.
I have over 80% equity in my home.
Nope.
I have over 80% equity in my home.
Dude, every cash out refi I've tried lately, they're going down in flames.
Dude, this person's saying they have a 20 LTV.
Yeah, so what you're saying, and I don't know if you know you're saying it, is you're saying, hey, listen, I got a $500,000 house with a less than $100,000 mortgage payment. That's what he's reading.
That's what I'm reading.
Yeah. What I'm reading is I have a $500,000 house and I have just under 400 grand in note at the moment. So that's what I'm reading.
So Argon, clarify that for us.
Clarify
how much
that.
do you owe?
Yeah.
How much do you believe your house is worth? And then we'll address
we'll
it properly.
clean it up. Yeah, because I know what he's hearing and I get it. And he knows what
I'm
hearing.
reading it.
He's being optimistic. And I know what I'm reading. And it's a little different.
He's probably right, but
Okay.
I want to be a little bit on your side, Argon. I hope you only owe 100 grand for 5.
Lower Alabama. My home's in Alabama.
You live in Alabama?
Dude, I love that song. Alabama,
it's a
the group.
song.
Yeah, the group. They were
Oh.
badass, man, back in the
Soul
80s.
Bear, the Christmas Bear.
Randy, I think it Rand Owens or Randy something. Like, he's badass. This is a badass group for a while.
Yasmin Benavides is in New York.
What's up, New York? MSG. I was
Coffee
watching my
Jungle,
social and I'm like,
where dreams are
what is
made
MSG? Isn't that what they put in Chinese food? I didn't know what it was.
MSG is
Yes.
bad.
I was like, why is everybody saying MSG, MSG? MSG's blowing it up. MSG's crazy. I'm like, what the hell? I didn't know. It was so stupid. Madison Square Garden. Oh, that MSG. I love New York. I love New York. New York's pretty badass. I don't think I could live there, but I love New
They
York.
had a big rally there not long ago.
Who showed up?
A couple days ago.
Who showed up?
This guy named T Money.
I saw this one this joke. I don't care what side you're on. There's the right side and there's the stupid side.
Tony Hinchcliffe.
Yeah, he came out and he's like, He's like, hey, funny, and then here's the main event. Okay, cool. And then one of the lefty political commentators came on and he said, yeah, can you believe that comedian went on and did comedic jokes before that? How could you? That's crazy. That would be like if you held a big rally in maybe Texas and you invited Beyonce and then she didn't sing. Can you imagine how people would feel?
She didn't sing.
She was pissed.
She didn't get the big enough check, man.
They were pissed, yeah.
All right, Alex Trejo, zero down home loan. How does it work?
Zero down. So what you do is you walk up to that home and you say, hey, listen, I want this home. I'm going to put zero down. And they say, okay, here's the keys. That's how it works.
And if you're in East LA, don't walk up to the home and say, what's up, Holmes?
Yeah, they're in trouble. Yeah.
Don't do
so
that.
if you go to, that's how it works. Zero down. You just say, hey, you know what? I want to put zero down on this home. That's it. And then you don't put any money down.
First, you start with calling a badass loan officer.
You need a badass loan officer? Call a badass loan officer. That's the number to a badass loan officer. Here's how it works. First, we have to qualify you for a regular loan. It's probably FHA, but it can be Fannie Mae or Freddie Mac. Can be. Even USDA, VA already has zero down. So we're going to qualify you for FHA. Oh, no, I have to qualify? Yes, you have to qualify. And you have to have a pretty damn good FICO score.
Dilly
I will
Sauce
say that.
in the house.
What's up, Dilly Sauce? So first, I'm going to get you qualified for an FHA loan, and you're going to have a decent FICO. What is decent? That's a word. Decent is 660 or greater. Probably 680, but I might be able to get away with 660. Now, once you have 660, now you're going to have some pretty bang-up income. And why bang-up income? Because contrary to popular belief, people think zero-down programs are for like poor people that are disadvantaged and they can't get a house and this is to help them. It's really not. You got to have they actually decrease your buying power. They throttle back your buying power. Because on a regular FHA, I can go 55% debt-to-income ratio. On a down payment assistance program, I'm maxed at 45. So literally, I drop your buying power. But if you've got that good FICO score and that good income, all day long, I can make that FHA 3.5% down, put you on a Cal Haffa with a zip. Did they put any zipping back in there yet?
Yeah, we can do zip.
So Cal Haffa with the zip, and it'll take care of your down payment and your closing costs in many cases. Now, what that means is you walked in with zero down. You do have the FHA primary loan, you got the Cal Haffa first, and the zip second. So you literally have 3 loans. You did not get a gigantic gift from the government. It's just a very fancy way to structure things, and you have to have damn good income and damn good FICO scores.
All right. So here's what we're going to do, guys.
Sounded better when I just said, hey, just walk up, put zero down, huh?
Just call the badass loan officer.
Dude, yeah.
We'll walk you through
He
it.
is pretty badass.
We'll walk
I'm
you through
not
it.
gonna lie. I've been watching him for a little while, seeing if he knows what he's doing.
He's been watching me.
He's pretty badass loan
A little
officer.
creepo.
Yeah, a little
okay,
creep.
we're going to jump ahead a little bit, then
Dude.
we'll get back to the rest
All right,
of you.
let's
We're
go.
going
What
to
do we
jump to Agron, because Agron says that he owes the appraisal at 320 and he owes 80.
Dude.
Money!
Agron, you just made this argument look stupid. You see how
You got yourself a loan.
yeah.
You got yourself a loan.
Yeah, you got yourself a loan. If you really you only owe 80 grand and you want to take a little bit, you can go up to 80% loan to value. And if you have to have a pretty decent FICO, because if you walked in with a 620 and you wanted a cash out refi, I'm flipping you to FHA almost immediately. And when I do that, there's some hidden things in the loan business that you probably didn't know about, but I'm gonna have to charge you UFMIP. UFMIP is upfront mortgage insurance premium, which is 1.75% of an FHA loan, and that sucks when you're coming from a conventional. However, if you've got decent FICO, I don't have to go FHA. Bye-bye UFMIP. And because you have such great LTV, loan to value, because of that, I probably won't even have to charge you MI. What? Yeah, but if you want FHA, I would have to charge you 0.55 MI.
What city and state are you in, Agron? We need to
You ask
know.
a lot of personal questions.
Here's the other thing.
What?
Do you do loans in his state?
I do them. I don't
You
even
don't
know
even
what state. Dude,
How do you know that?
Because I do it in all states.
What states?
State of confusion?
Okay, I know you live there. Where do you seem to visit every now and again?
I go to Texas all the time.
Okay.
I go to California all the time.
Okay. What other states do you do loans
Nevada.
in? You do loans in Nevada? Okay. What other ones?
Arizona.
That's a good one.
San Diego.
That's a good one too. That's not a state.
That was a trick. Yeah, that was a trick question.
Okay, we do loans in all 50 states, guys.
All
So
50.
regardless of where Agron is, we can help him. And he's going to call a badass loan officer.
Yeah,
That's
if
what
you
he's
need a
going to
badass
do.
loan officer, call Christian Lee. Your badass loan officer is New York and Funding.
Hey, what about that trash that's floating in the sea? Do you do loans there?
Oh, dude, yes we do. Oh my God. Oh, this is going crazy. It's fun to watch.
man.
Dude, he's a comedian. He's supposed to poke fun at you. If you've ever been at a... Now, I got a funny story because there's somebody watching right now who I actually took him before he deployed to serve our country. Thank you, sir. But before he deployed to serve our country, I took him to a comedic show, to a stand-up comedy show, and we got front row. And guess who the comedian called out? Him. And guess what he called him? He's like, you're too damn young to be here. You're a fetus. For the rest of the day, the
Call him
whole
a fetus?
they just keep coming back. Fetus. Yeah. And I'm like, hey, dude, we went to a comedy show. Shit happens. Yeah. So,
Yeah, man.
anyway.
Yeah, man. They're all fun. I love those shows. D bad. I just got a 5.99 on my 30-year VA loan. Is that good right now?
Shh. If you just got 5.99 on a 30-year VA loan with no buy down, oh my God, that's great right now.
You get two of these.
With no buy down. If you had a buy down, shit, we can get you 4.5 with a buy down.
You can get a lot more with the buy down.
Yeah, a lot more with a buy down. But if you got 5.99 at par, you're doing great.
Yep.
But if you spent money, you should call us. Probably do better.
Yep. Max Martinez, I closed on my home on October 1st. 5.49 APR. Texas 317 FHA 2760 a month, and it was overappraised for $390,000.
That's a home run, Max. Good job. Good for you. Did we do your loan? I don't think so.
Max
I just
Martinez
did
sounds familiar.
I just did one where the appraisal came in $20,000 higher than the purchase price, and I'm like, yeah, this is a good deal. It's in Texas too.
All right, Whoville Hater was in Turks and Caicos for the last month. It was lovely.
Damn, somebody's a baller.
Oh, we know Whoville Hater's a
Yeah,
baller.
he's a baller,
He
man.
don't play around. For all the
Yeah.
single ladies, DM him. How do I fix my credit before purchasing a home?
First, pay your bills on time. That's how you start. You pay your bills on time.
Write that down.
Second, here's a very important one that I keep. People are like, hey, what if I just tell them that I'll pay it and then ask them if they'll delete it? I'm like, no, you don't understand leverage. You can't call them up and say, hey, I owe you $5,000. Here it is. Can you please delete the bad stuff? You got no leverage. But if you call them up and you say, hey, listen, I got 5 creditors. I owe 5 of them $5,000. One of y'all is going to get my money. Here's what I'm going to ask. If I sent it to you and not the other 4, will you delete the record? The first thing they're going to say is, I'm sorry, we have that. That's not our practice. We don't do that. And you say, okay. And then you say, you know what? I appreciate you. What was your name? Bill Smith. Thank you, Bill Smith. I just wanted for the record, because I know you're recording your phone calls, that I just offered you $5,000 and all I wanted was a deletion letter. That's it. But you're telling me no, Bill Smith. So I appreciate it, Bill Smith. I know you're recording this for training purposes or whatever. And Bill's going to go, hold on one second. Hold on. And then he's going to go, I'm going to go talk to my manager.
Oh.
And then they're going to put you on
Manager.
hold for about 5 minutes. 5 minutes. And during that 5 minutes, you're going to be like, I wonder if they're going to do it. I wonder if they're going to do it.
You can make A's during that 5 minutes.
So, and then Bill Smith is going to come back and go, hey, just for you, only for you, my special friend. Today we are making an exception. Only for you, today only. But my manager says if you're willing to do that, we'll send you that letter. And then you say, cool, give me a letter. And they'll send you the letter. And then you pay it. But now you had leverage. If you did it the other way, you're like, hey, I got $5,000. I'm going to pay you off. Okay, cool. Can you please, maybe delete that? They're going to go, sorry, sir, that's not our policy. Have a nice day. Thank you, the $5,000. Bye. And then it's there for the next 10 years.
Now, let me give you the short answer.
Damn.
Call us,
All
and
right.
we'll let you know if you need credit repair or not.
That was
Done.
shorter. Yeah, that was shorter.
Argon.
Mine was more fun, though.
Yasmin, stay away from the city.
All right.
Yeah,
That's
that city's
MSG.
crazy.
MSG.
That city is
Now, here's a
crazy.
quick side jaunt story. New York City, I went there one time for the ball drop. First, New Year's Eve, it is crazy.
You went there for your balls to drop?
Dude, you're crazy. I went there for the New Year's Eve, and I went there, and I was like, this is unbelievable. The people are so tight. It's so many people. It's crazy. And it's not like one rock band. there's like 10 rock bands. About every maybe quarter mile, there's a stand and a whole bunch of people around it. An unbelievable amount of people.
Did you go in the middle?
It was amazing.
Did you go in the middle with the crowd?
Yeah. It's crazy, dude.
Did it stink?
Yes.
Yeah.
And it's weird. And it's so weird. And I'm like, I'm glad I did that once. I won't do it twice.
I did it in Vegas. I wouldn't even do Vegas again.
Yeah,
it's the same thing.
Dude, it's crazy.
People wear diapers.
I couldn't believe it. Yes. Oh, it was common for everybody to have a bottle and then to
pee in it.
All right.
Gross.
Yeah.
All right. Let's see. Aragon. Yes, sir. I put $100K down when I bought it because of my credit, and my rate is 10%. And I'm in Texas. You need a refinance.
10%.
You need a refinance.
Oh yeah, we could probably. Well, first off, is that an Alt QM? Because if you did an Alt QM, there might be a prepayment penalty on the Alt QM. But almost all Alt QMs are usually, if you had a decent loan officer, he designed it with a takeout loan, which means we're going to take it to Fannie Mae, Freddie Mac, FHA, VA, USDA, something a little bit later. But 10% is too damn high. In fact, I don't think I could even give you 10%, not for the last year. Actually, not for the last 20 years, because it's illegal. There's a certain spot, we get a range. And right now the range is probably from 4.5 to about 8.5. Somewhere in that range. And that's it. That's all I'm allowed to give you. I'm not allowed to give you anything more. If I give you a higher, you get money back. If I give you lower, it costs you money. But there's a range, and it's not set by me. It's not even set by the bank. There's these rules that happen, and all of us, we have loan officer licenses numbers. Mine's 944-254.
1066958.
We have to do that for compliance reasons. And I couldn't give you a 10. Even if you asked. I'm trying to think. Can you think of a time when you could have done a conventional conforming, would give him a 10, even with the most rebate you possibly can? I don't think so.
It's not on the sheet.
It was never been on the sheet, no. And I don't think we can go to special pricing for that, because that's way off the charts.
But Ag Ground, we got you back, man. You know who to call. Screenshot.
Yep.
Okay. D-Bad. Can you guys get me a better VA rate in Texas?
That's what everybody asks us. Hey, what do you think? The only way we can know.
Texas?
Yeah. The only way we could know is if we got a little bit of a profile. We'd have to know what your property is. I'd have to know your income, your credit score. The first thing you're going to say is, I don't want you to pull my credit. Everybody says that. And I'll say, you know what? If I'm shopping somebody else, just send me the credit reports from the other guy. I'm good with that. But if I do move forward, I have to pull your credit. That's the law, by the way. It's the rules.
For the 6.3 million of you watching right now,
6.3.
I need you guys to tap that screen, give us a bunch of hearts. It brings more people into the algorithm, more people asking questions. We are going to get to every single one of you that have already asked a question, so hang in there. Don't leave. We're going to answer your question, call out your name, ask you more questions if we need to. So please give us the hearts. Anybody that's watching, give us the shares. Brings more people in. If we help more people, the world is a better place. Yep. Coffee! They're asking $2,500 on an FHA loan to close the contract.
To close the contract, does that mean you're stepping out of escrow and you don't want the contract anymore and you want to close it out, or are you trying to consummate the deal and you're saying that that's the closing costs? Coffee, I need clarification.
Or is that commission? Sammy, is Trump going to bring down the house prices? I can't say that. I'm supposed to say T-money.
So bring down house prices. Trump doesn't actually. Oh, you can't say that.
T-money.
Is T-money going to bring down house prices? Nobody can bring down house prices. Nobody. Not even if some politician came in and said, you know what? I'm going to make that cheaper by giving you $25,000. That doesn't bring down the price. It actually, if you understand supply and demand,
hey, Yesenia,
all that's going to happen is they're going to increase the price. That's it. So house prices are driven by the market. The market is going to be influenced to a degree by politics, but not that much.
Oh, I thought you were going to
So he's not going to. No, he's not going to. So the answer is no, he's not going to. Can't do it.
User 7404. Most collection companies are now deleting collections off credit reports once they've received payment.
Oh, I would like to believe
sound like
you.
a collection
Yeah, I
agency.
would like to believe you. I would like to believe
Are
you,
you a
user
collector?
74, but the very fact that you don't have a user profile or a username, and that sounds like a bunch of BS, I'm going to say probably not. The Fed might drop another 25 basis points. No good if the market goes 0.75. Sounds crazy. Hey, user 6213. 1, I wish you had a profile pic, but whatever. 2, November 7th is the next Fed meeting, and based on all the factors, I'm not going to say they might. I'm going to say they have to, because things are getting out of control for the Fed. Nobody's talking about it right now because the election is taking all the oxygen out of the room. But the economy's not in a good spot. and the Fed's big M1 lever, the one thing they can do is drop 25 basis points. I think betting man says it's going to drop 25 basis points.
What's up, Navy Mom?
What's up, Navy Mom?
Birdman says, is it hard to negotiate a house money if upgrades are needed, i.e. burnt grass, fencing, estimates help? Question mark?
Birdman, it's super simple, unbelievably simple in the right market. It's impossible in the wrong market. So it depends on your market. How motivated is your seller?
Hey, Janice.
Because remember, you're asking for money. If you're looking for money, then the market has to complement what you're asking for. What does that mean? Oh, no. So let's just say that this house has been on the market for 7 months, and this guy got a job in Florida 3 months ago, and he's left, and he needs to get rid of this house. And you're the only offer that's come in 7 months. Well, that market, you got a lot of latitude. You can say, hey, you know what? I would like you to fix the burnt grass. I want you to fix the fence. And the guy's going to be like, I don't have another offer. I don't. So I'm just gonna have to do it, and within reason, or maybe not even reason. Sometimes they'll lose money in order to just get out of it. Mm-hmm. So it depends on the market, and you better have a damn good realtor. The realtor will know the market. If you got a good realtor, the realtor already works the market, so they know which house is sold, which one's for sale. If you want to know if your realtor is good, here's the quick question. In the last month, what's the highest price house sold in this area? What's the lowest price? That's it. If they say, I have to go check my data, say, don't give me exacts. I just want a ballpark. Oh, let me get back. They have no idea. They're not watching the market. They're closed 1 transaction a year, maybe 2. They have no clue. But somebody who's actually in the market making things happen, like I'm dealing with a Rancho Cucamonga realtor, they'll be like, well, the house on 4th, well, it just sold for $1.2 million, and then I did see a condo that went for $485. It went like 4 weeks ago. I think there was problems with that condo, but they know the market. So if they know your market, if your realtor knows your market, they'll know whether or not you can negotiate. If not, flush your realtor, get a new one.
Yeah, Celso Luna, what's up, my man? How the heck have you been?
What? Celso Luna.
He said, hey, guys, where you been? Haven't been able to see you.
You say.
We haven't been on here for about a month, maybe 6 weeks, somewhere in that range. But we're back, Celso. We are back. So with your real estate knowledge and all the stuff that you've gone through this past year, what questions do you have about buying and selling or refinancing?
What's up, Celso?
Whatever it may be when it comes to real estate, Celso. But glad to see you. The Fed might drop rates another 0.25.
We already did that, yep.
Oscar, why can't my realtor tell me my closing costs?
Well, probably because your realtor doesn't actually deal with the closing costs. The realtor's going to tell you about 3%. That's crap. 3% in a regular market, which is about 400 to 600,000. That's probably in the range. But it is going to be largely determined by your market, your purchase price, and some other parameters of the loan. Like, let me give you an example. I have a $1.6 million property I was just pricing right a minute ago. You know what 3% of $1.6 million is? Do you know?
No, 45 grand.
Are we going to have $45,000 in closing costs?
No.
No, of course not. 3% is not going to be it. It's not. Now, your closing costs are going to range anywhere from 6 to 12 grand, somewhere in that range, depending on purchase price, area, and a few things that's in there. So the realtor doesn't really know. And if they do not know the months that we close in, some months lenders have to impound 9 months. 9 months of property taxes. Some months we have to impound 9 months of property taxes. Some months, 2 months of property taxes. So if your property taxes are, let's just say $1,000 for easy math, $1,000. Well, if I have to impound 9 months because of the month you close in, well, there's 9 grand added to your closing costs right there. If I only have to impound two months, well, there's 2 grand added to your closing costs, and it's going to depend on the month that you close it. The realtor probably doesn't have any clue. Most loan officers don't have any clue. They look at the LE when it comes out of the CD. They have no idea how I got there. If you ask them to break it down, they're like, I don't know. That's what it says. Yeah.
So let me give you the differences, guys. You have the real estate agent, which is the house, and you have your loan officer, which is the money that buys the house, okay? So anything that has to do with the money, you probably want to talk to your loan officer. Anything that has to do with the house, you probably want to talk to your realtor. But there's one big fat line between them, and here's the problem. If you get a realtor who's been in the business a long time, they think they know the lending side. If you got a loan officer who's been doing it a long time, they think they know the real estate side. Be very wary of that. Don't let the other person talk about the person on the other side of the fence. Go to the source themselves and ask them the questions. Like he said, the realtor's going to give you an idea of what it is, but your loan officer will get you a closer estimate. And to be honest with you, when we pre-qualify you, we don't even know exactly what the closing cost is.
What?
We'll tell you in a close range.
What?
We'll give you
You've been guessing?
range.
You're guessing?
Never
You've been
guessing.
guessing?
Never guessing. But give you a close range of where it's going to be.
Yeah.
Once you get into escrow on that property, it unlocks the fees that escrow and title are going to be charging on that particular property, and we'll give you an exact. But no one knows the exact until you pick the house. And then once you pick the house, we'll give you the exacts, and if it makes sense, we move forward. If it doesn't, we'll look for another one.
Yep.
So know the difference between your loan officer and your real estate agent.
And let me give you a big one. This is a big one. So in California, we have this limit. It's called Proposition 13, where we're not allowed to. Proposition 13. We're not allowed to increase property tax base too much. It's like 1% a year. So most properties in California are going to be between 1.1 and 2.4, somewhere in that range. That's California. If I go to Texas, it's common for me to see 2.8, 2.9. What does that mean? Property taxes are a very big portion of your payment, therefore, how much you qualify for. So if I qualified you for $400,000 in California with a 1.2 tax base, and you said, you know what, I'm not going to live in California, I'm going to Texas. I'm like, whoa, that 400,000 no longer stands. What is it now? About 360. Because of property taxes. That's real.
Yeah. Unless you move to South Carolina, then it goes to almost nothing.
Really?
I think it's 0.5.
Really?
0.5 in South
Arkansas
Carolina.
is like 0.8.
That's not
No,
lower.
I think, yeah, I know.
So anybody that wants cheap taxes, go to South Carolina.
Or Arkansas.
Well, that's just property taxes, which
Yeah.
means their state taxes are probably a lot higher.
Yeah, well,
because Texas does not have state taxes.
Flip that around now. You know how much California is going to charge you for income tax? Oh my God, 13% if you're in his income category. 13%. You know how much tax is going to charge you? 0 every time. 0. Doesn't matter what income category you're in. 0. What? Yeah, that's what happens.
But if you want to buy a house, pay 3% in taxes. That's a lot of money, guys. All right, guys, load up that chat box. Fill it up with all your questions, comments, concerns about buying real estate. Let us know your particular scenario. So your credit score, your income, how much house you might be able to buy. What are you going through? Why do you think you can't buy a house? Or maybe you think you might, but you want to get some clarity on that. Load up that chat box. We'll let you know. But you know what time it is?
What time is it?
Time for commercial.
If you need a badass loan, call a badass loan officer. You can reach your badass loan officers, Chris and Lee, at New American Funding by dialing the numbers on the screen. But you better screenshot because it's going to disappear in 5, 4, 3, 2, 1, bye.
Okay, give us a little bit of update as to what's going on in the Fed, man. Let us know, just a real quick, actually, let's answer this question.
Okay.
Martinez, do you help with new construction loans? Do you?
A.H. Martinez. A.H. Martinez. You see what I did?
Why you gotta be all gangster, man?
Dude, I'm gangster.
Why you gotta
I'm
be
going to put
East
a
LA?
face tattoo
Why
right
you gotta
here.
go East
Face-
LA on
I'm doing a
us?
face tattoo.
You're from New Mexico.
So? You think we got hood over there?
It's not the old
Shit,
Mexico,
we bang.
that's for sure.
So, yes, we do the new construction loans. They're very popular to talk about. Unbelievably. Yeah, foo. Yeah, foo. Shit. Gat. So, yes, they're very popular to talk about the new construction loans. And it's kind of like winning the lottery. It's like, hey, do you like to talk about winning the lottery? Sure. Do you have a lottery in your state? I do. How much is your lottery worth? $500 million?
How much do you really see?
Do you know what would you do with your first day if you won the lottery? I sure do. Do you know if you would pay off your mortgage? I do. What kind of car would you buy? All of that thought is a hell of a lot of fun.
So fun.
But when you actually get to, do you actually win the lottery? Not happening. So we do talk about the one-time construct loans a lot. A lot. Do we do a lot of them? Hell no. Everybody wants them. Like, you mean I could just build my house any way I want? Yes.
That
You
kitchen.
can. The kitchen.
The garage.
The garage?
The master
What if I want a
bedroom.
4-car garage?
You can have it.
What? Dude, I want that.
He wants that.
I want that.
He just told me.
Okay.
I heard it.
Okay. So what's the problem with that? The problem is that you still have to qualify for the loan. You have to qualify with your current rent, whatever it is, an apartment or your house. And you have to qualify at the stages to go through, and it's very complicated. So Do we do them? Sure we do. I love to do them. I'd really like to walk one of every through before the end of the year. I'd like to walk a VA, an FHA, a Fannie Mae, a Freddie Mac, and even a USDA. I'd like to walk it from I got ground to I got a house.
There's not enough time, dude.
But
it's already November almost.
Maybe, yeah. Because how long is it going to take to build the house?
Oh, God.
What?
How long?
I don't know.
Shoot.
Yes. Well, the VA is going to give you 1 year from the approval of the loan and then with a 6-month extension. Guess what? You're going to need that 6-month extension. It is not easy. It is not easy. What? You got to hire a contractor? You know, do contractors screw people over?
No.
All the time, every day. Every day.
And you're probably going to hire your cousin.
Yeah, you're going to hire your cousin because
it's cheaper.
Yeah, cheaper. You can try and get cheaper.
Oh, no.
There's an old saying that says, if you think hiring a professional is expensive, try hiring an amateur.
Oh, goodness.
So, can we do it? Yes. Do we do them? I wish we did more.
If you have a lot of time and money, give it a shot.
Yeah, if you're loaded,
give it a shot.
And you have a big income,
give it a shot.
Yeah, big income.
But if your loan is tight, you can barely borrow, and you don't have a lot of money set aside, buy an already built house.
Yeah. So,
my opinion.
Yeah.
My opinion.
So there's only 2 things you need to have if you're trying to do a one-time construct loan, and that's a lot of money and a lot of balls. You're running short on either one, don't do it.
Add time in there. Put 3. Add time. Money, balls, and time. Steve, can you please tell us the difference between conventional and FHA? Oh, why did you ask that, Steve?
Oh, Steve.
Everybody,
Steve.
grab some food. Grab some food.
Steve.
We're going to be here for a minute.
So, FHA is for the brand new guy. It's got training wheels on it. It's got training wheels on it. But they charge you they slap you on the back of the head every few minutes on an FHA loan. What do you mean? Well, they give you wider underwriting ability. They're more forgiving. So if you got more lates or if you got a lower FICO score, FHA will work for you. But they're going to slap you on the back of the head. They're going to say, hey, you know what you have to pay? UFMIP. I'm not even going to tell you about it, but you're going to have to pay it. How much is it?
1.75.
1.75% of the loan. Well, wait a minute. If I have a $500,000 loan, what is 1.75%?
That's like $8 grand.
That's like $8 grand. And they're just gonna add it on top. Don't worry about it. Yeah, forget about it. Don't worry about it. We're just gonna put it up there. 1.75. Don't worry about it. Hey, we're FHA. We're nice. We're not gonna include it in the debt to income ratio or the loan to value. Don't worry about it.
Oh, thank you.
We are gonna pay it.
I appreciate that.
We're not gonna conclude it. So FHA is easier underwriting, and it's usually for your first time home buyer. But let's just say, hey, you know, FHA, I want to put 20% down. I don't want no mortgage insurance. What are they going to say?
Sorry.
Still mortgage insurance.
Still mortgage insurance.
But that's not fair. Oh, we'll be fair. You know what? We'll drop from 0.55 to 0.50. Then we're fair.
That's very
You're
nice
going to get
of you.
mortgage insurance no matter what.
Very nice of you.
Yeah. So, FHA, Federal Housing Authority, is a straight government loan. It's straight. It's from the government. From the government. Yep, that's FHA. Fannie Mae and Freddie Mac are conventional. They're GSEs, government-sponsored enterprises. Government-sponsored enterprises. Why did that happen? Well, because the lending industry fell apart in 2008. The government stepped in, wrote a big fat check, and said, hey, from now on, we're going to, trillions.
How fat?
Very fat. So from now on, we're going to have say in what the guidelines are. So they don't absolutely run the guidelines, but they have a lot of say. Because of that, they put the rules kind of in place. Now, can you have no mortgage insurance on a conventional? Yeah, you can. Put 20% or more down. 20% or more down. But you got to have a good FICO score. Now, if you say, hey, don't worry about me. I got a 622 FICO.
Don't worry about me.
Don't worry about me at all. Well, 620 is just qualifying. 622 is horrible in conventional conforming. Horrible. For conventional conforming, at about 760, 780, it starts getting really good. But anything below that, it's okay. It's okay. So the difference between FHA, Fannie Mae and Freddie Mac, which are also conventional loans in that category, conventional, FHA is easier to underwrite, but they're going to slap you every time you turn around. Slap, slap, slap. Conventional, hard to qualify, but more big boy loans. That's big boy loans. Yeah, badass. So I hope that answered.
All right, Michael Valdez coming with the hottest topics and the most fun loans that I've ever heard of. He wants to know if we're talking about 203Ks.
Oh, Michael.
Those
Michael.
are awesome.
I think Michael's in the biz. I think he's
203Ks are like going to the dentist.
Yeah, they're like going to the dentist and saying, hey, I don't have enough money for the Novocaine, so can you just pull the tooth? Just pull it. You'll get the tooth pulled.
No fun at all.
Yeah, you are going to scream a lot. 203Ks suck.
They sound nice.
They sound beautiful. Hey, you know what? Why don't you get a house and I'll just give you some extra money to make the kitchen right, the bathroom right, and then you
What
can
about my flooring?
You can put some new flooring.
Nice.
Dude, that's it.
Let's do that.
That sounds great, right?
Easy.
It sounds amazing. Okay, so here's what happens in practice. In practice, it's a loan that usually piggybacks on an FHA loan, and it's called a 203K loan. And the 203K loan, you have to, before you get the loan, you have to go to the contractor and you have to say, hey, how much is it going to cost for that flooring? Like, I don't know, 10, 20 grand. Can you give me an actual quote? Okay. You're going to go, holy smokes. They're going to go, hey, that's not good enough. I need 2 quotes. All right, cool. Then you're going to go, all right, who's going to manage this whole thing?
Well, the case manager, of course.
What? Where do I get a case manager? Where do you find those?
Oh, we'll point you on. No worries.
Don't worry, we'll point you. Do you have to pay for him?
No.
Yeah, you do.
No. No.
Oh, you don't?
Not up front.
Oh, not up front. Yeah, good point. Yeah, it'll be built into the loan. Don't worry about it. Okay, cool. Now, can I just get the money now?
No.
No. We're gonna hold it in escrow, and everything is have to start rolling forward. And the general contractor is gonna have to report to the case manager. You think he wants to?
No.
The case manager is gonna have to manage the general contractor. You think he wants to?
No.
Oh no.
That's not the worst part, though.
Tell me.
Here's the worst part. So contractors, by large, are great at their discipline. So if they do flooring, they do roofing, they do electrical, whatever it may be. But then you have a GC, okay? The GC doesn't necessarily have the discipline and the specialty. He subs everything out. But that GC is also out trying to get new business. That GC is managing all the projects. That GC must now fill out all these documents and prove all these insurances in order to get approved to do the work.
That's right. Forgot
And
about that part. Yeah.
all this is getting done while the seller's trying to sell this house and you're trying to hold them off from moving onto another party.
203K sounds amazing. It really does sound amazing. It's kind of like, hey, I'm a teenager. Can I just have candy every day?
Every day, all day.
Every day. Can I have candy for breakfast, for lunch, and for dinner?
What about snack?
Snacks too?
How's that turn out?
Doesn't turn out so good.
No.
Doesn't turn out so good.
Lose all your teeth.
Will they do a 203K loan? Sure I will. I'll actually give you all the cautionary tales in the front of it. I'll fund the FHA loan before the 203K loan. There's going to be an escrow on the back of the 203K loan. I'll make it happen. It is never pretty. I have never seen a 203K pretty. I have seen them completed. And at the end of it, I always ask the buyer, would you do it again? Like, no, I won't do it again.
Yep. It's meant for 2 people. The right buyer and the right seller.
Yeah.
If one of those is not the right one, garbage.
But it's kind of like down payment assistance. The ones who think they can get it probably should. Down payment assistance is not that great. It's really, I'm not a big, I'll do them, but it's not, I'm not a big fan of them. Just not a big fan.
All right, running out of time. It's going to move a little fast. User 7387. Can I qualify for $900,000? 3 family, live in 1, rent the other 2.
Sure. Do it.
And then they give the scenario.
Okay.
It's 2 apartments for rent, $2,500 each, and I have $90,000 in income, 806 FICO, have $90K for the down payment and closing costs.
So maybe. So here's the one thing.
That might work.
Yeah, that might work. And tell you why. If I'm going to use the rental amount, which is a lot, if I'm going to use the rental, I need to have 6 months. 6 months reserve? Is that what the guideline is? Yeah, I
Yes.
think it's 6 months. Yeah, 6 months
Per.
reserves.
Per
renter? Okay. So I have to have 6 months reserves. But if you have $90K, we're going to use a portion of that for the down payment, and we're going to use a portion of that for reserves. What are reserves? Good question.
What
Glad
are
you asked.
reserves?
Reserves are money that I keep in the bank. After I close the loan, it's still in the bank, and I have to prove that it's in the bank after I close the loan until the day after I close the loan. Then they don't care anymore. But up until that, you have to have 6 months reserves. So if the mortgage on that $900,000 house is $6,000 a month, 6 times 6 is $36,000. I need $36,000 after I've paid for all closing costs, out down payment, everything out of pocket. I need to have $36,000 left. And in that case, I can use the rental income in order to make that loan qualify. So maybe it would qualify.
Yeah. You're welcome, Steve. And he also asked, what is the rate? Is low in FHA than conventional? Clarify that.
Steve, it depends on your FICO score. If you have a low FICO score, below 750, you're probably always better off with FHA. If you're above 750, you're probably always better off with conventional when it comes to rate. There's other factors on the loan, but there's a 0.55 mandatory mortgage insurance on an FHA, 0.55. So that, let's say I quoted you out today at 5.5 on a FHA, 5.5 on an FHA. But after you add that mandatory 0.55, you're at net effective of 6.05. That's what your net effective rate is. So now I pulled up conventional. And in conventional, I get you 6. Well, on paper, you see 5.5 and 6. 6 looks better. But if you put the MI on it, it's 6.05 versus 6. Conventional wins in that scenario. Because the MI is mandatory for the life of the loan unless you put more than 10% down. Then it falls off in 11 years.
There you go, Steve. Jacqueline's
That was a lot.
smiling. I have 590 credit score with 90K income. Everyone's making 90 G's now.
90K.
Great job, guys. Using VA, what can I qualify for in San Antone?
So yours is a very unique situation because you have a VA loan. Your VA loan gives you a lot of leniency. Because that 590, I would tell you, maybe FHA, and even then it's going to be rough. But because it's VA, you probably have a lot of leniency. You need to go to a VA direct lender. We're the VA direct. So we'll do it for you, yeah. But you need to go to a VA direct lender. If you go to a VA lender with overlays and they're not direct, you're probably not going to get in. They're probably going to tell you, hey, you need 580 FICO, 620 FICO, but VA doesn't have a FICO requirement. The lower level banks do. They're called overlays. The lower level banks have FICO requirements, but a direct VA lender, there is no requirement for a FICO score in the VA guidelines. So yes, we can make it happen. Yes, we can make it happen.
So Jacqueline, this seems like a little bit of a challenging files, but it sounds like Lee's up for the fight.
Let's do it.
So you need to call this man.
Do it. Let's do it.
User 6213, do we need to set up escrow before closing on a newly built purchase? Can we opt out? How it works?
How it works? I like that. How it works. Do we need to set up an escrow on a newly built? So I'm going to assume that you're buying a new build. And
Where'd you get that assumption
because
from?
it says newly built.
Man,
So that's
you're
what I'm
solid.
assuming, dude.
You're fast and witty
Dude,
and
I'm like this. It's right off the dome, man.
not so ugly.
Off the dome like that. So, do I have to set up an escrow account? Maybe, and maybe not. If you've got an unbelievable FICO score, like a great FICO score, you can actually opt out of the escrow account. In which case, you're going to be required to pay your insurance and your property taxes on your own, but it can only happen in a conventional loan, Fannie Mae, Freddie Mac. That's the only ones it can happen on. Now, you have to have a great score and it will increase your interest rates. What? Yes. If I priced you, let's just say I priced you at 6 today, and you said, hey, Lee, that's 6. That's 6 with the built-in impound. You say, hey, I don't want to impound anymore. All right, cool. Let me click the box. Oh, 6.18. What? Why? Because if you don't pay your property taxes, it's a higher risk for the bank. If you don't pay your insurance, higher risk for the bank. They mitigate that risk by increasing your interest rate. That's how they do it.
Nice. Liz M, can I start selling my home after 18 months, or do I have to wait 2 years to avoid taxes? Does the 401k have to be with an active employer? Two different questions.
Liz M, those are big boy questions too. So, Liz M, what you're talking about is capital gains situation. And I am not a CPA, I am not an accountant, but I know in my life, there is long-term capital gains and there is short-term capital gains in my life. This is my way of saying I'm not a pro in that area. Short-term capital gains are anything less than a year. Long-term capital gains are anything more than a year. So, if you're looking at, you've been it over for over 1 year, then you're looking at long-term capital gains. Now, if you're looking at, hey, I have an increase in payment and I wish to switch to my new property, that's a different situation than capital gains. And if you're looking at that, then you're talking about cost basis and stepped up cost basis. So it's a whole different category. Your 401k is your 401k. If you don't work for that company anymore, I won't say the law, but in my world, you can roll over that 401k into an IRA or to another 401k. It's your money. Save that it didn't get vested by the corporation. there's some exclusions in there because the company gets to set up the rules.
Here's what's funny about 401k is that 401k sounds nice because you're saving money. You might be even making money in the market. But you know what 401k actually is?
Three numbers in a letter.
401k?
Three numbers in a letter.
That pertains to what?
401k.
Tax code.
Yeah,
It's just tax code.
yeah.
It's how are we going to grab more of your money?
Yeah, it kind of is. Yeah.
Salsaluna 350 is asking a great question, and I'm going to tell you, Salsaluna, because I know your file.
Yep.
You and I are going to have a conversation after I'm done here on the live,
Okay.
because there's options that you have. But to answer the question, it depends on your need for the
Yeah.
money.
Sometimes yes and sometimes
That's
no.
it.
Because here's the key. Celso. And for anybody else listening, let's say we got 8 million on YouTube, 7 million on Instagram, 6 million on whatever. So yeah, we got a lot of people. Yeah, millions. So here's the key. People like, hey, do you think I'll refinance in the future? That's a stupid question. Why? Because when rates go down 2 or 3%, everybody's going to refinance. Everybody. So when you say, hey, listen, I have a 5.99, and in order to get the live ended.
Hour cuts.
I have a 5.99, and in order to get this 100 grand out, I have to get a 6.5. I don't know if that's very smart. Okay, you're right if you're going to hold that for 30 years. But the idea that you're going to hold it for 30 years is asinine. Anybody who actually understands finance, the market, the world, and the business that we're in, as soon as rates go down, it's not a matter of maybe I'll refinance. You're going to refinance. Everybody's going to refinance. Everybody. You're going to get hounded. Why? Because it's public record that you got a loan at 8%, and now the rates are 4%, and the whole world's going to come at you. They'll be like, hey, have you known that we can drop your rate? We can drop your rate. We can drop your payments. We can drop your rate. We can drop your payments. You'll get hounded. You're going to refinance. Why? Because it's a no-brainer. It's the right thing to do.
Okay, 2 things, guys. If you're ready to get started on a home loan, you know who to call. And if you just want to get started on it without even calling us, go to the link in the bio, select apply for a home loan now. Also, if you have crap credit and you know you can't buy right now, click on the link that says fix my credit so you can start your loan now or you can start fixing your credit. Sign and Sal Finance.
Hey, you know what? We've been Chris and Lee. We appreciate you. We are out.